Which is the best AI stock to buy right now? C3.ai or Upstart? I'm going to answer that question in this video, so let's get right into it. So C3AI revenue growth of 7.11% in its most recent quarter was way ahead of Upstart's negative 53% revenue growth. Now I've updated C3AI's, I've looked at its updated earnings, the most recent one that came out yesterday, and revenue did turn negative for C3AI as well. So each of these companies has delivered negative revenue growth in their most recent quarters. The next metric I'll compare these two AI companies on is net income over the trailing 12 months. And before I do that, I'll go over how each of these companies uses AI right now. So Upstart uses artificial intelligence to determine which one of its borrowers it should lend money to, or also which how much of an interest rate it should give its borrowers, right? And it's different from traditional lending methods that use the FICO scores to determine what lenders should be approved and what interest rates lenders should pay. Meanwhile, C3AI uses artificial intelligence to improve business processes, the way humans interact with computers to make that process more streamlined and save the company money as well as improve performance. The company's got a new generative AI product coming out that it just said yesterday is going to come out broadly in the first quarter of 2023. That could mean in the next month or so. And it's already using this AI technology with two of its larger clients, Baker Hughes and Koch Industries. So that's how these two companies are using AI to transform their business and to deliver innovative products to the market, but they're both losing tremendous amounts of money on the bottom line. C3AI 238 million in net income losses over the trailing 12 months. Upstart negative 108 million in net income over its trailing 12 months. The next metric I wanted to compare these two on was their cash flow from operations to sales over the trailing 12 months. And again, they're both negative and trending downward. C3AI at negative 59% over the trailing 12 months compared to Upstart at negative 80.5% over its trailing 12 months. That means for every $100 in sales, it's costing Upstart $180. So it uses $180 in cash to generate $100 in sales. That's not very good, and it's not very good, but C3AI is also not very good at negative 59%. So both of these companies are moving in the wrong direction fast, and their stock prices, in my opinion, are being helped, being juiced by the hype, the enthusiasm over artificial intelligence. The final metric I will compare these two on is their price to sales ratio. And looking at this valuation metric, C3AI is trading at a much more expensive 11.29 price to sales compared to Upstart trading at a price to sales of 1.907. So if you had to pick one of these two AI stocks to buy, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would say Upstart is the better choice because they're both not going in the right direction, but at least you're not paying as much for Upstart. Overall, I would say that neither of these two stocks would be a buy in my book, right? So the better choice, in my opinion, would be not to buy either of these companies. But if you had to pick one of these two, then it should be Upstart, right? So if you wanted to benefit from this rise in artificial intelligence, in my opinion, Microsoft stock would be one of the best ones to capitalize on the trend right now. But from these two, in this video, I'm comparing these two, and so Upstart would be the better choice between these two innovative stocks using artificial intelligence to deliver innovative services to clients. All right, so that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership. And if you made it this far, I'm going to link you to two other videos that I think you're going to appreciate and like as well. So click on one of those, and I'll see you over there.